welcome. This presentation is the title Why Accounting is Important, the Language of Business and Vision. I'm Professor Vân Hồng Vũ and I will be your professor of your course of Introduction to Financial Accounting. I'm from ISEN and Junior Lin. So, today we will cover the four areas. The first will summarize the nature and purpose of accounting. Outline is the history and evolution. I will explain to you why, as a future professional, you need to understand it, and finally, identify the main branches of the accounting profession. A question many of you might have is, I'm an engineer, I'm a scientist or a future manager. Why do I need to study accounting? You just found out that you have to study this subject and it may seem unrelated to your main field of study. Maybe some of you in big data, some of you in cyber attack or any other area in the technology. So let's spend some time exploring why this subject is a critical component of your education and your future career. What comes to mind when you hear the word accounting? Perhaps you think of balance sheets, profits, the taxes, or just a lot of number, right? So you can see a lot of number. You may have a vague idea, but you are not sure how it connects to your field. Our goal today is to clarify this connection. As it had, accounting is an information system. It's about collecting financial information about an organization and communicating it to the people who need it to make decisions. These key users include the manager of an organization, the shareholders of the corporate, like the investors, the shareholder of the Apple company or the Amazon. They want to know about the financial information of this company. And we also have to think about the bank. That's the one that give the money to invest or the company in borrow it, right? So you might think you can just ask the accountant or any person from accounting department for whatever you need, but it is very important to understand the information yourself. If a manager receives a report, they need to be able to answer what does this information actually mean, how reliable it is, and what I'm supposed to do with it. Relying blindly on others is a risky strategy in the business world. Let's look at the formal definition of what is accounting. So, accounting is a service provided for those who need information about an entity's financial information. So, what does it mean, the entity? We look at in the data is the assets and is the liability. So here we have four key important entities: financial performance, assets, and liability. So now let's together to break down the definition. Continuing with our definition, as we will see that the service, it means that it has to accounting is a service. It exists to help the people make decisions. So what kind of decision? Decision to invest in one project, to buy a machine, or to sell this company and to buy the share of other company. The information it provides is a quantifiable and expressed in monetary terms. It means that we cannot say that okay, in my company I have five building, but how much is the value of that five building? It also is very important related to an entity. So what does it mean, an entity? An entity is any organization, a person's business, a large corporate like Amazon, Tesla, Airbus, etc. And also it including the non-profit organization. So we discuss more about the kind of entity in our class, right? Okay. And it measures the company's financial performance by, what does it mean, the financial performance? But it means that you matching the income, the revenues that company receives with all of the expenses over a period. For example, we can see how much a company earned for 1 month, 1 year, a quarter, and how much the company spent, right? So now we continue with our definition. We will talk about the assets and liability. So what does it mean, the assets? Assets are resources that will provide a future economic benefit for the company. For example, the company will buy a truck. So this the truck will help company to provide some of services like a farmer, right? Machineries that will be used for many years to produce the goods. For example, if you see that you work for the Google, you can see that the Google will invest to buy the computer, to invest on all of the system like a server. So that we call the assets of the company. On the other side, we have to think about another word we call is the liability. Liability, on the other hand, are obligations that arise from a past event. What does it mean? For example, a debt. The Google need the money to invest in the new giant project for IA, for example. So they need to money. Money, where does this come from? They can borrow from the bank, or they can issue some of we call is the obligations document to bring back the money. So a typical example of liability is a loan from a bank, any bank that must be repaid. I mean that is a return to the bank after a period of time, right? So now you know that the financial accounting, this is a service that provides information about the companies, about the entities, the financial performance, and it about the assets and liability of any entity. So, it is very important to understand what accounting is and what it isn't. While the information of accounting is powerful, it also has a limitation. For example, it's historical and focuses only on what can be measured in money. The public often mistakenly believe that an accountant's main job uh, is to catch fraud, to find something wrong in the accounting booking system. This isn't their primary role, right? This misunderstanding is an expectation gap which become visible during the major accounting scandals, right? So we have to think that there's different. So now, just a very quick look at the case study of the Enron scandal, right? So a prime example of when accounting goes wrong is the Enron scandal. So in the early 2000s, Enron was the seventh largest company in the United States, right? So unfortunately, this company collapsed into bankruptcy due to a massive accounting fraud. This which was concealed by its executive and missed by its auditor. Right? So you can see here is the executive of the Enron at that time. They are one of the 100 best company in top 10, right? So this event highlighted the devastating consequences of unreliable financial information and deeply shocked public trust. So now we take a look back to the history of accounting. Let's look at the history, right? The word account simply means an explanation or a report. To create a report, you need a record, right? So you need the information, the data, the time, or something like this. The earliest forms of accounting work symbolize keeping written records. So they keep all the information of how much they spend, how much they earn. So you can imagine ancient farmer measuring their wealth by counting how many cows, how many sheep, and how many pigs they have. For example, you can see that in our ancient farmer, they want to know his possession. For example, they have a cow years ago, and now, and what is the trend, right? So they don't know what is the value. But from your point of view, it's very difficult to know what is wealth, right? So we know that I have a cow, so more 5. I have a hen less than 30. I have a pig less than 2. The sheep more than 20, etc. And the land may be no trend, etc. But I don't know exactly what is my wealth from years ago and now, whether I have a more wealth or whether I have a less, right? So that's the we call it a revolution of the accounting system. We call it the double entry bookkeeping. So that's we will learn during that course, right? So a major revolution in accounting was the development of double entries booking. This is a powerful system where every transaction has a two effect. So remember, every transaction has a two effects. That's the reason why we call this a double entry booking system. This system was widely used in Venice, Italy by the 15th century. Sorry. And this system provided a complete and sales tracking records of business activity. So what they spend, what they earn, etc. It was first documented in a book published in 1494 by an Italian mathematician. So maybe if you are Italian, you can guess, you can know who is he. So this is Father Luca Pacioli. We can say that he's also the father of accounting. Thus, mathematician was Luca Pacioli, often called the father of accounting. His book on double entry bookkeeping revolutionized commerce. He introduced the concept of debit. It means that owe to the proprietor. And another is a credit. It means that owe by the proprietor. So enters his system provided an accurate and reliable record of business history. So he also I think that is Dominical Father, Dominical Father, right? So now we look at this double entries booking system. Why has the system lasted for more than 500 years till now? The reason this system has endured for over 5 centuries is that it answers three timeless vital questions for business for any business owner. The first, what profits has the business made? Right? So we talk about the income and also the cost. The second question is how much does the business owe? The liability, it means that what is my obligation, what I owe from you. And the last question is how much is owed to it. It means that how many of assets, how many of cow, how many of house that I have, right? Together, these provide a complete picture of performance and position of any company or any person's business. So now we already mentioned about the double entries booking system. We will look very quickly about the branches of accounting, right? So over time, the accounting profession have evolved into several distinct branches, which each a specific focus, right? Let's briefly explore the main one, right? So we see here accounting, we have the accountancy profession, we have a bookkeeping, we have a financial accounting and reporting, etc. So we look. The first one, the branch one, is the financial accounting and reporting. So this one is the focus on recording transaction and preparing financial statement. And this is very important for external user. It means that like investor, creditor, government, regulator, etc. The main output the financial accounting reporting is are the income statement, the balance sheet, and the cash flow statement. We call it the financial statement. And I have to remind that this is the primary focus of our course, right? So we focus on the first branch, financial accounting and reporting. Secondly, we talk about the branch number 2 is the bookkeeping. Bookkeeping is the foundation of financial accounting. It is a systematic process of recording monetary transactions in the financial records of an entity. Accuracy in bookkeeping is absolutely essential for creating reliable financial statements. So we learned this in our class also. There's the two important branches that we will discuss during our course. First, we mentioned about the auditing. Auditing is a systematic examination of an entity financial records, system and control. An auditor job is to provide an independent opinion on whether the financial statements are presented fairly and accurately. Auditing builds trust and credibility in the financial information that the companies release. So, if you look at one of the financial statements, you can see normally for the public listed company, or in front you have a endorse of the name of the auditor. So we can talk about the big four auditor like PwC, Deloitte, KPMG, yes, something like this, man. So now we have a quick look about the branch number 4, the taxation. So taxation specialists calculate the amount of tax, right, payable by both businesses and individual. They also assist with the tax planning. It's important to distinguish between tax avoidance, which is legally minimizing the amount of tax owed, and the tax evasion, which is illegally hiding income to avoid paying tax, right? So maybe you heard about the tax haven, or en français c'est la paradis fiscal, so something we talk about this. So now we look at the branch number 5, the financial management. The financial management focuses on setting financial objectives like creating plans, obtaining financing, and safeguarding a company's financial resources. This role is often more involved in the general management and strategic direction of the business, using both financial and non-financial data to make decisions. We move to another branch, which we call is bankruptcy, and we can combine the liquidation. Finally, we have the specialization of bankruptcy and liquidation. Bankruptcy is a legal process for individuals who cannot pay their debt, right? Liquidation is the process of winding up a company that is in serious financial difficulty, selling its asset to pay its debts, right? So sometimes if you pass on the street, so you can see that in front of the shops they may mention the liquidation. It means that you can buy some product with a very good price if the company in the liquidation state. So these specialists manage the orderly closure of a business, right? So let's pause for some quick questions to check your understanding of what we have discussed in the first presentation, why accounting is important. I have 4 questions for you. what is the main purpose of accounting? And the second question is what is the difference between an asset and a liability? The third question is very easy. Who was Luca Pacioli? And finally, what is the difference between financial accounting and auditing? And to summarize, why is accounting is important for you? First, it is the language of business, and understanding it is crucial for decision making in any field. Second, it provides a framework for measuring performance and financial health of any entity. Third, the skills are transferable and valuable for managing your own personal finances in the future for your family. And finally, accounting empowers you to be a more informed and effective professional. Thank you for your attention. If you have any question, please do not hesitate to contact me, and I'm looking forward to seeing you in our first class.